All right, welcome everybody. I'm Conrad Majeka, realtor in Orange County, California. And today we're breaking down something that almost nobody understands, but everybody signs paperwork for. And what are we talking about? Title. If you're buying a home, selling a home, going through probate, divorce, or investing in your property, title is protecting you in ways you probably don't even realize. And today we're doing Title 101 with Jackie Padilla. We're going to explain what title is, what title insurance does, what can go wrong, and how this protects your biggest asset, which is your home. So if you ever bought a house and just signed documents without really knowing what title was doing, this live stream is for you. So drop in the comments, are you a buyer, seller, investor, or just curious? So let's get started. So Jackie Padilla, title rep. Crystal Rains, our co-host, will be on shortly. But and before we get into this, I do have a funny story that kind of happened to me. Us as real estate agents, we were always trying to make things happen. So was door knocking yesterday, and I actually walked up to a house with flyers. I actually have buyers that were looking to move into the area. And the guy said, when I walked up to his driveway, he says, "Go yourself." And, funny story about that is he was really aggressive. And all I did was I just let him talk. Wow. And, afterwards, he was like, "Oh, okay." So he asked my business card, and he was kind of just helping me out through the area as far as homes to kind of take a look at for my buyers. So kind of interesting and just funny thing that happened. But, people vent, and, whatever. I've been in this business for a while. It's not the first time someone said that to me. So,
yeah. I mean, we have a different, we have to cold call in title and escrow. We have to cold call agents, which are usually a bit nicer. But usually they're trying to rush you off the phone. But that's honestly how I gain a lot of my business is I just start a conversation with them, even if they don't want to talk to me. And then, during the call, they'll just kind of loosen up a little bit. They'll vent and then just kind of be open to hearing more. So, but, it's hard dealing with the general public. I don't know how you guys do it.
It is what it is, People walk into open houses, people have different moods that they're in when they're walking into an open house or reaching out. It's you kind of just go with the flow and don't get mad or whatever. People have a bad day. Obviously the guy had a tough day with a bunch of people knocking on his door, and I didn't even knock on his door. I just showed up to his driveway. Hello. I mean, anytime I see a door open or a garage door open, or if I see somebody like kind of close to a window, I just try to, hey, I'm here. Like, I'm not trying to,
rob you,
just here to help you out. If want to be upfront with people. So, okay. So let's get into it, Jackie. So what is title in the simplest terms?
In a simple way, title insurance is a one-time upfront paid fee during the escrow process and during the property purchase, or you get these during refinances also. But it protects the lenders and the homeowners, so the buyers, against any losses or anything that might be discovered through the process of escrow. So that can be things such as liens, judgments, fraud, unknown errors, boundary disputes. So as soon as you are, if you're a buyer and you're going into escrow, your lovely team is going to contact a title insurance company, and they're going to order what's called the prelim. And so once we look at that, then we can make sure everyone's safe, or that we need to work on some things. We need to clear the title before we can transfer the property. So that way it's free and clear when we transfer it over.
Yeah. And I wish Crystal was on here. Hopefully she gets back on. She's in the middle of a pretty intense escrow right now, but she has a good story about boundary disputes. I wish she would be on here right now. So hopefully she jumps on. Speaking of which, Crystal, the co-host, is on.
Hi.
So sorry for my delay, you guys. I really appreciate the patience. What a day.
Yes, I agree. It's been month end is always crazy, but I can only imagine escrows and all that stuff going on. It's a lot.
Yeah, for sure. So thanks for having me as usual.
Yeah, absolutely. Just real quick, Crystal, because we just started. Jackie gave us a good idea of what title is, and she mentioned title boundaries, and I know you have a story of something like that.
Oh boy, yeah, really short and sweet. One of the properties that I own, I'm not just a realtor, I'm an investor and a homeowner myself, right? I think that experience is a testament to everything. My family has owned a home since 1951, one of them. And obviously back then we were very cordial with all of our neighbors, like we still are, but we have some new neighbors. Back then they had come to an agreement that they weren't going to put up formal lot lines. Everyone knew where the lot lines were. They're very clearly defined by title. Everyone's records are clear, concise, coinciding, and pristine. But then we had a situation, I think it was like probably 2 years ago, where the home, one of the homes up against mine on the backside, was listed for sale and sold. And the new buyers came in. There was one line in the MLS that said, "New buyers, please be mindful of your lot lines and boundaries," right? And the buyers decided not to do their due diligence, purchased the home, and then started to build an ADU or attempt to build an ADU in my backyard.
Oh no.
So we had the joys of finding records and going through everything and, learning about assessors and how important everything down to the inch and the detail is.
Yeah.
And I ended up putting up an over 300-foot fence after paying for a surveyor myself to make sure
the land surveyor
I had all the records, like every record since being built, every original blueprint of my home, everything. I had it all. So even got the surveyor, paid a substantial amount of money to make sure that my records were proper, and then went and built quite a fence, and that disabled them from moving forward. And then they actually ended up selling, and it just was purchased less than a year ago by new buyers. So very important. Title is so key. And one of the things that I learned in that situation about my own position was, even with the power of real estate and generational wealth, a lot of people don't have the insight or the guidance to keep their title policy updated, right? And when companies are absorbed or transfer ownership or sold, bankrupt, whatever the case may be, there go your records too sometimes.
Yes.
So, very important key points. And yeah, Conrad, I think that you remember that experience, what it was. Lots of tears, because it's interesting being a homeowner and a realtor and an investor, because you have every aspect of the true spectrum, being both on the sales side but the consumer side. So it was very eye-opening for sure.
Yeah, I can imagine. We get requests all the time for boundary lines, plot maps, all those kinds of things, because these disputes come up a lot, especially when people are going to go purchase a new property on like somewhere where there's not a lot of activity going on with, sales. And we just had one actually out here in the Valley in Chatsworth. And it's pretty like Chatsworth has like two sides. It has like farm side, and then it has like, updated side that's going to be more cosmopolitan type of look.
Yeah.
But the farm side, everyone's been neighbors for years. They're just kind of like, oh, this wall's been here. We know it's on their property, or, but like, it's just a wall, like it's fine.
Right.
But, some people will come in and they're like, no, it's not fine. It's not just a wall. Like it's 3 centimeters over, like whatever the case may be. And that's their right, if it is their boundary line, it's their right. So we do get a lot of those requests to be able to try and clarify and get those things, cleared up before they close the escrow or things like that. So
for sure. Surveyors are no joke too. I definitely understand the difference significantly between like an appraiser versus a surveyor and the detail involved. Obviously it's a costly difference, but it's for those details. So depending on what you need.
Yeah, definitely.
Choose the right professional, right?
Yeah. I have seen too, like surveyors will go out to make sure that a land that a buyer is potentially or investor is looking to purchase is going to be buildable upon. And if it's not, like, they're selling this plot of land, but then you can't really even build on it because of maybe the foundation that it's on, or maybe it's, protected land, or depending on what it is. Like there's been so many, where it's like, oh, I'm going to back out of this deal because it, we got it surveyed and it's not worth it.
Right. And I just had, I would say maybe 6 months ago or so, I had a very large land listing that was actually 3 plots in one listing.
Oh, wow.
But that is such a testament to like the topography is very important. Bringing those people in for development purposes, very important. We were also up against a nature preserve. So all of these are key details, right?
Yep.
I appreciate your knowledge. This is awesome.
Thank you. And I appreciate your experience, because sometimes, it's hard to explain these types of things. And until you're kind of in it, then you're like, oh shit, like, yeah, this is what they're talking about,
Yeah, that's true.
Yeah.
Test world versus real world, right?
Definitely.
Next question I got for you, Jackie. It's it's pretty basic. I think you hit it, but what's the difference between the deed and title?
So the deed, when we talk about a deed, so there's a numerous different types of deeds, right? So title, what we're looking at is how you're currently vested. So when you're going to be purchasing a property or selling a property, you have to order what's called the prelim, which I think we talked about a little bit. And the prelim is, almost think of it as Carfax, but for your house. So when you're purchasing a car, you kind of want to look at the Carfax and see the history and, has it been in any accidents, what's gone on, kind of like, through the different turnovers of this car. So that's pretty much how we kind of explain the prelim. It's going to explain exactly who's the owner of the property and how they're vested, which is pretty important. If you are planning to purchase or sell and you're in a trust, it's important for us to have those trust documents to make sure that this is who you say you are and all of that good stuff. But then also it's going to tell us who the current grant deed owner is. So that will be in there. There'll be any deeds of trust, which means most likely there's some type of mortgage on the property or some type of loan against the property, and there's like a lender involved. There'll be, different things that we'll see. We'll see the judgments, we'll see liens, we'll see if you're defaulted on your taxes, we will see that in the prelim. So it's almost like a report card, I guess you can say, for the property. And this is really, really important for lenders because they might know, hey, we're looking at the current deed of trust, and it is saying that, this person is the owner, but I do also see that they have, they're looking at the grant deed, seeing that this is the owner, but then they're also seeing maybe 2 or 3 deeds of trust, meaning that there's going to be a loan that needs to be paid off before they can sell this property. So, so yeah, this is kind of, like I said, I guess Carfax, and it kind of prepares everybody in the transaction once you get the prelim on what needs to be handled before we could transfer it to the new buyers free and clear.
Awesome. Awesome. I like that idea. Carfax.
Yeah.
So-
Very good, like terminology to use to make it user friendly for people, you know?
Yeah. Yeah. It's hard to explain title. Like everyone's always like, what do you do for a living? I'm like, title insurance. They're like, is that like homeowner insurance? Like, no, it's very different. So yeah.
It's very different, but very important. Very important.
Yes.
So, you know, running off that question, you know, what do you do for title insurance? So what does a title company actually, do behind the scenes?
Yeah. So our job is to pretty much protect the incoming buyer to make sure that they are not inheriting any type of issues. So what we do behind the scenes is, like I said, we're going to order that prelim. Once we get it back, we're going to read it, examine it. And if we call them exception items, but they're line items. So it's like line item number 1, line item number 2, number 3. And each line item has something related to the property on it. So let's say line item number 3 says there's some delinquent taxes. Then we will go in and see like, okay, how delinquent are these taxes? Were they paid? And it's just not showing paid yet. So we go in and then that will adjust obviously the seller's net, because we might have to add those past due taxes to their sale. And basically they're going to have to pay that through the escrow. We also go through and we clean up anything that needs to be dealt with. So let's say like a judgment. A lot of times we see child support judgments. Those need to be paid. We'll see liens. A lot of HOA liens we've been seeing a lot lately, where the HOA is putting liens on against the seller for not paying the HOA fees. We need to make sure that those are all going to be taken care of and cleared up. And if they do require a payment, we'll usually take the payment from escrow if it can be deducted from there. That way the seller is not really coming out of pocket to pay it. It's going to be paid from the proceeds of what they were supposed to make from the sale of the house. There are some exceptions, but that's usually how we like to deal with those types of judgments and liens and things like that.
So question for you also, depending on what type of liens or encumbrances or like clouds on title, I guess you could call it, like depending on what each of them are and like what type they are, how long do those timelines look? If you're clearing up a construction lien versus some other type of lien, for example, like what do those timelines look like?
Yes. So it really depends. Like I know if we're trying to clear something up that's in LA County, I know it's going to take a long time because the city of LA does not work fast. If we're dealing with something in Simi Valley, which is considered Ventura County, they're on it. They're really quick. Even sometimes we get like these, they're like brush clearance items, like where the property could be in a high fire area and there's brush clearance that needs to be taken care of before the sale of the property. In Simi Valley, you can deal with that in a week. In LA, it's going to take like 3 weeks. So it's just depending on kind of who we have to work with to get those things done. We usually advise our agents if they're, working with the seller, as soon as they sign that listing, to order the prelim so we can start working on these even before they're getting offers, because they're going to have to clear it up anyways. So we're asking our agent friends, like, hey, as soon as you get the listing signed, let's make sure there's nothing scary on title that we're going to have to clear up, and that's going to delay your escrow. So we do try and prevent any delays during the escrow process by taking care of, the prelim exception items beforehand.
You guys are pretty fast on our Anaheim listing that we just sold. So, and that was good because other things popped up in it. I'm not going to reveal, but I was like, oh, that's a surprise to me. And so you guys were on it.
You guys handled it with true grace, honestly. I'm grateful for that deal too, because it was such a learning experience. Everyone was winning at the end of the day, but we also got a lot, just an experience out of it. And working with you was an absolute dream.
Thank you.
Very rare. I've got some great clients right now who are just incredible, and it's not an everyday thing. So I like to acknowledge it for sure.
Oh, thank you. Yeah, I It was actually a different experience for us also. And it was really good. And I thought everything was really proactive, right? We made sure you guys let us know about this listing way ahead of time before you guys did open houses and showings and all that, which helps us so much, right? Because especially when you're in title and escrow, like you're usually the bad guy. You're usually telling people like, hey, this is on the prelim. Hey, this is going to be delayed. Hey, especially if there's solar, forget it. So like when our agents are active with us from the beginning, when they get like these listings or when they know that something's coming soon or whatnot, then it really helps the transaction. It makes it more smooth. And I think everyone gets way more of a better experience in that.
Yeah. So this is just a question for everybody that's watching. So have you ever had a deal delayed because of title? So
yes. I've had deals delayed because of title in a big way. I mean, who you work with really matters. I've had deals delayed because of the specific title company. I've had deals delayed because of issues with the prelim. I've had issues because the title and the lender couldn't get it together to be able to, get it where it needs to go. Like underwriting kept shutting it, the title underwriting kept shutting it down, and then the lender underwriting kept shutting it down because they couldn't come to an agreement on exactly how things needed to be read. And so, that's a big thing. Like when the lender underwriter and the title underwriter do not agree and they're trying to make something happen for the buyer. I've had people say like, oh yeah, well, I'm just going to assume those previous liens, even though I'm the new buyer, like I'll take them on. Your lender's not going to let you do that. Like, you know what I mean? Why would a lender let you assume somebody else's problem just because you want this property? And sometimes these problems take longer to clear and title's trying to get them cleared. And the lender is just like, no, no, no. And then, there have been a lot of delays because of, title issues. But again, the sooner more proactive you are on getting that prelim ordered once you get a listing signed, because you can only get a prelim ordered if you have a current listing. We don't really order them just to like look into things. That's what our property profiles are for, which are free online. But they won't show anything that's public record, like a lien, a judgment. They won't show
what you need to know most.
Exactly. So things that are not public record, it'll show taxes, it'll show the vesting, it'll show the like easements and the plot map and all that stuff, but it will not show anything that's public record, like judgments, liens, and all the bad stuff.
Fun.
Yeah. So yeah, definitely have had that happen. And I will say we are going to be the bad guy again coming March 1st.
Okay. Here it
Tell
comes.
us about it.
So I don't know if you guys want to jump into it yet, but FinCEN is coming March 1st. So FinCEN is the Financial Crimes Enforcement Network. And really this kind of falls on escrow companies to do the reporting, but we, being escrow friendly as a title company, our underwriters, which are Westcor and First American, they are really wanting to help the escrow companies and take that responsibility of reporting and putting it on the title company through a third-party service called like fincenreporting.com, where they'll actually deal with everything as far as getting all this information. But FinCEN. So FinCEN, if you're a buyer and you would like to purchase a property in an entity such as a trust or an LLC, and you're paying all cash, then you will have to report to FinCEN. Why? FinCEN is really trying to crack down on money laundering. Between 2015 and 2021, more than $2.3 billion were laundered through real estate. So why?
That is insanity.
Yeah.
How many eyes are on every single transaction, or at least hopefully, if you're not like representing yourself minus a broker and an agent, like if you have all these eyes on, that is a wild amount. So I frankly think this is good news because it's more regulation. It keeps consumers safer. Like that matters. That's a huge advocacy for buyers, right?
Yeah, I agree. I think that it has its good intentions. And I think that, this being in place, I think will make people think twice before laundering money through real estate, because obviously they do it through real estate because you can get such a large sum of money at one time. Like you can launder a lot of money at one time. So, they're talking like the Zeta cartel laundered, I think like 7 properties, all were huge ranch mansion properties, all worth more than like $14 million. So I'm talking, you can launder a lot of money at one time through real estate. So, so that's kind of what FinCEN is going after, and why they're putting this in place. And this isn't new. FinCEN actually used to have something called GTOs, which are geographic targeted orders. So those are areas where they know there's a lot of import export business or a lot of like money laundering going on. So places like San Diego, places like San Pedro, Oxnard, not Santa Barbara, what's it called? San Francisco. So they know that these transactions are taking place. So they used to just be targeted in those areas. So if an all cash buyer in an entity was purchasing, then we would have to report to FinCEN just in those areas. And if it was over a certain dollar amount. Now it's nationwide, so no targeted areas anymore. And it is no dollar amount. So any dollar amount we have to report.
Question for you when it comes to that. Obviously, if you're fully underwritten, right? You've got a buyer who's fully underwritten. They're competitive, like a cash buyer almost, right? Do you still report the same? I would think and hope so, right?
So actually, we were just talking about this the other day. So
I think it matters myself, but like I want to know.
So the strategy of where agent will write an offer on behalf of a buyer and they'll say it's all cash. Mm-hmm. But then later on, you find out, oh, there is financing going on behind the scenes. So now your escrow team will probably hate you if you do that, because we have to start the FinCEN reporting before, the middle of the transaction. But if, let's say, your buyer is getting funds from hard money or from a private lender, maybe a private Benny, something of that sort, where it's private financed, and that finance company is not under the same rules as a bank, and they're not under the same securities as a bank, which has the AML, which is the Anti-Money Laundering Act, or if they're not under, if they're not currently under a current NMLS number, then that will also trigger the reporting. So let's say if they're getting hard money from Uncle George, and they are still planning to pay 12% interest or whatever the hard money is, but they're coming in as all cash, it's still going to trigger that reporting.
Excellent. Such great things to know, and more importantly, great for consumers.
Yeah.
I always tell people, like, I'm not here just to sell. I'm here to protect you first. And if the sale, if we can make it happen, that's the goal, right? But like protecting you is key.
I mean, a lot of my investor clients are really not happy, right? Because especially right now, there's so many properties that are being sold as just is, because they're usually like seniors, or they're probate cases where the current homeowner doesn't want to put money in it. They just want to sell it. So they're selling it as is. And this is like an investor's dream, right? To come in and buy it all cash. But usually these investors are buying in LLCs to be able to do this project. Mm-hmm. Yeah. So that I can see, like a lot of my investor clients are already kind of upset about it, but they're going to have to report. And there's no going around it.
About it before it is implemented. That is the key education and the point of things like right now. The more you know, the better you can perform and do, not just for everyone, but yourself. And like, if you're an investor and you're really looking to make a spread, this is something you need to know about.
Yeah. And most likely escrow is going to request it in the beginning of the transaction. And so you'll have time to do it, but escrow will not close without this, because escrow is the number one person responsible for getting this reporting done. If it is not completed, and if they intentionally are closing the transaction without doing the reporting and FinCEN finds out, escrow companies have to designate one person to do the reporting in their office. And so whoever that person is faces fines up to $250,000 and even jail time. So escrow is not going to let you close without doing this.
Yeah.
Nope.
So,
rightfully so. I would hope not. Yeah.
But like I said, like with 805 title, we have a designation letter for the escrow companies that we're working with. And we're saying like, hey, we'll take that responsibility of getting the reporting done. And we're working with a third party. That third party will reach out to the buyers directly. They'll get all the information. If something's not filled out correctly, they'll get it redone and handle everything and store everything, which is godsend because, I don't know if you guys know, but escrow companies are targeted like crazy for hackers and all that kind of stuff. So for us to have more information that we already want on your buyers, like this is asking for full account numbers, full social security numbers of all beneficiaries in the trust that have more than 25%. It's asking for all LLC members, citizenship. It's asking for just everything under the sun, where the money is coming from. It's asking all of these questions. And so it can be pretty invasive. And we don't want to store that data anyways, right? Title and escrow, we don't want to store that extra data. We're already storing a lot of data. So we don't want to pay for those insurances, extra insurances. We don't want to pay for those storage fees in our software systems. So we're really thankful to have these third parties that the underwriters are providing to be able to get this information. And it costs $120. If an escrow company is doing it themselves, they're probably going to start charging around $450 to $800, depending on the escrow company.
The fees can definitely drastically vary, I would imagine. So that's like a huge deal as well.
Yes. So, and obviously 805 Title is offering this, but majority of title companies are going to be offering this. So I say take full advantage, especially if you are an escrow company, take full advantage. But as agents, I would promote to your escrow companies if you are seeing that they're going to charge that $450 fee to the buyer, just say like, hey, has it crossed your mind to have title take care of this? They only charge $120 to do it. And then you don't have to deal with it, So I think that will be a good reliever for escrow companies, but also just being smart for your clients on their money. A lot of buyers, if they're a first-time home buyer and they happen to be buying in a trust or an LLC, like a lot of times they don't have extra funds to just spend an extra $500 on another report. So just protecting them and knowing that they have options is a good, conversation to have.
That's very good. It's good to know saving money. So my question that kind of came up because today is February 26th. Does this start with transactions that open March 1st or anything that closes after March 1st?
So it's anything that's going to be closing after March 1st. So if you have transactions open now, it will trigger the reporting, which is kind of like a pain because, now we're going to have to rush to get all these things done within the next 2 weeks of things that are closing if they are cash entity purchases.
Well, technically they have to close tomorrow. Tomorrow's Friday, and
yes.
the first is Monday, or Sunday, but
yeah. So anything that closes after Monday, and if it's a cash entity purchase, they'll have to report, which stinks for anything that's closing on Tuesday and you have to last minute enter and all that stuff. But because it's 111 data points, so you're going to have to work really hard on that. But I'm sure escrow companies have already, if they've noticed, and it's like, most escrows, let's say, are 30 days. If they know it's going to fall into that timeline, I'm sure the escrow company has already filled out the questionnaire and submitted it to FinCEN.
Great. I think from like Crystal and my standpoint, people that are laundering money through real estate, through a transaction, I think it's going to take away all the time wasters from our side of things. Knowing that this is going to come down the line, we get all sorts of people with all these different, ideas of all cash and coming in and they don't close escrow.
Yeah, exactly.
all sorts of time wasters. And I think I know why people would do laundering through real estate. You put money into an escrow and then take it out, that type of thing. But yeah, I mean, as a former financial planner, we were told to warn the anti-money laundering unit for very large transactions that were kind of, they gave us like a questionnaire.
Yeah.
It was like 5 or 6 questions. This has been some time ago now, but yeah, it's kind of interesting how, at the time, this is like during the housing crisis. So I don't think a lot of these guys went into real estate, but they went into life insurance and a lot of those financial products. So they were kind of coaching us on that at the time, because that it shifted into that direction. So now they're going to have to go find another industry to go through that stuff, which is going to be tough.
I will say there are like some loopholes that I've been seeing. So like people who are going to just do the down payment financed, people who are just going to finance 5% of the transaction. They're already thinking about how to do this. So, and technically this only applies to residential properties. So anything above 5 units is considered commercial or multifamily. So that Vincent is not going to make you report if you're doing commercial or multifamily. They're not going to make you report if it's if you are buying in some type of like utility, or if you're buying in like the state of California. Like they're not going to make you report. They know that those are most likely not probably drug dealers.
Right.
So
they're smaller for sure.
So there are some exceptions.
I'm interested in learning how this applies only to residential now, but who knows? Maybe in the future they will implement something for commercial, and I would imagine that they would, because larger numbers. But then again, I would imagine, like, I don't know fraud statistics. It's not something I'm very versed in because I don't look them up every day, but I would imagine that they're probably greater in residential. But
yes, but also the new one has been vacant land, right? So vacant land is already subject to a lot of fraud because no one's really watching it, right? So you hear of people like, recording uninsured deeds, and then just recording a deed in their name. So they're like stealing the property essentially. So that's already happening a lot with vacant land. So now with fencing, it only applies to vacant land that is zoned for residential. So if you wanted to get creative, you could technically, avoid reporting with buying vacant land that's not zoned for residential. So, which now there's like a lot of those like vacant lands where you can build up to, I think it's like 9 units or something that just happened in like the most recent, after the fires, it happened where you can build up to, I think, like 9 or 10 units on a vacant land, even if it's R3 zoning. So yeah, it's
that would get interesting for sure.
Yeah, I think this will definitely help slow down, that $2.3 million, and that's what's reported. Like 2.3.
It's got to be way beyond that we don't know about for sure.
Yeah, so that's $2.3 billion that was reported, but I'm sure there was more. So I'm sure it'll slow down that number. But I think people will always, find a loophole. But
is there going to be a new car form pertaining to this? I would imagine so, because similar to like how you were talking about escrow's role and how they essentially keep eyes on the numbers and so on. Obviously, Conrad and I as agents, we work with these contracts day in and day out, and we have the wire fraud advisory, which we've had since what feels like, a significant amount of time. So is there going to be another document or car form or something that we implement into these transactions? Maybe it's 1 page, maybe it's 5, but like, what does that look like?
I'm sure there will be. We don't know as of yet. And I think there are some things that FinCEN still hasn't really cleared up, even though we're going live with this, like blind trusts. Like, how are we supposed to really deal with blind trusts? blind
Right.
trust. They're in blind trust because they're probably, especially in California, we have athletes, we have actresses, we have famous singers, we have a lot of celebrities. So they're going to be in a blind trust. And so how are we going to deal with that? How are we going to ask these buyers who are buying usually all cash in a blind trust to report when the whole point is to avoid getting their information? So there are some things that they haven't fully cleared up, but I assume once we go through a couple of trial and errors with some things that are not cleared up, then I assume that CAR will eventually roll out a form that's going to cover FinCEN.
Right.
And
Like see what type of litigation potentially pops up and then create something around that, or like.
Right. I mean, I think if I were a celebrity and I was being forced to, fill out 111 data points and I didn't want to have any paper trail of me owning anything in this house, we do see managers and stuff like that fill it out on their behalf, but that's not really the point, right? We really want to know who's behind the trust, who's actually the buyer. So yeah, I don't know how they're going to deal with that one, but we'll find out, and I'll keep you guys updated if I hear anything on that. But yeah, so that will be interesting. I think CAR will roll something out eventually once all the kinks are kind of smoothed out and all the trial and error has happened. I'm sure they'll roll something out. So.
I can't wait to ask my TC because my girl Shiloh's probably very much in the know about this. And as much as you may know about the laws that are incoming and implementing, sometimes the forms aren't always there or, caught up or as modern, right? Sometimes they have to revise them. So this will be really cool to see where it goes, but definitely a conversation to ask her about,
Yeah. And I think, everyone will probably hear more about issues or roadblocks that are coming from this FinCEN reporting. I think it's going to delay a lot of escrows. I think this will delay more escrows than title does because people don't want to give this information. And they feel that it's a breach of, they're just trying to buy a house. They're not trying to join the Secret Service. You know what I mean? So for them to be asking 111 data points, most people are not part of a cartel that are trying to, launder money. They just have this trust or they're in a partnership and they're investors. So for them to breach this amount of information is scary. And also you're trusting a small mom and pop escrow company to hold all of this safely. To me, it's just it's a lot of liability down the line. And I don't think that FinCEN saw it as that. I think they saw it as a, government security type of, we want this information, but I don't think they've thought of all the repercussions that can happen with trusting these escrow companies to hold this information. So I do see a lot of issues that might pop up.
Got it. Yeah, definitely. I could see that as well.
Yeah.
So waiting for the backlash, I guess.
Yeah. I mean, escrows are already targeted so much for hackers to, they want to intercept our wire instructions and they want to intercept all of these things, opening packages and stuff like that go out. And now this is just another thing that we're going to have to protect. And it's a lot of stress and a lot of worry and liability, which is why a lot of these title companies are pushing these underwriter data collection companies because it relieves all the responsibility from the escrow company or the title company in that they don't have to keep this data. So it'll help a lot.
Right. So everybody that's watching out there or watching this on replay, this is the breaking news of title and real estate that's going to come down. And if you're a cash, buyer, you better close, by 5 o'clock tomorrow and, get it in for less, problems coming up next week. So
if you're part of the Zeta cartel and you're closing, next week, you might want to push that up. Just kidding.
Yeah.
What in the Wild West, you guys? It's so good.
You're going to have some crazy conspiracy theorists that's going to talk about what happened in Mexico over the weekend and this FinCEN thing and all this other stuff. So I could see that,
Oh, yeah.
Crazy. The internet's wild with a bunch of people.
Already, it's been so many ideas, you know, and I'm like, oh man, we'll see. Like, because now if you're getting seller financing, the seller technically has to report to FinCEN now also.
Oh.
So now, like, people,
so any type of financing, right?
anything that's not insured, like a bank would be insured, which will have the Anti-Money Laundering Act, which will have the what's the other one? It's SAR. It's the I have it in my notes right here. It is the Suspicious Activity Report, which I think is what you were talking about earlier, Conrad. And then, or an NMLS number. So if you're dealing with a financial institution that doesn't have all three of those or any of those, then you're going to have to report. And so seller financing falls under that category because the seller most likely doesn't have an NMLS number or the AML Act. So they would have to report. And so they're thinking this might trigger for now FinCEN to want sellers to start reporting also.
This is really like, it's interesting. Yeah. So like on both sides, very powerful, you know?
Yeah.
You know where this is also going to trigger some pain points and fraud, maybe not directly through real estate, but all these guys that are selling courses on seller financing, loan assumptions, and creative financing.
Yes.
Yeah, you guys are going to be in a bit of pain now, and a little bit of a surprise too, as far as what's going to happen. So
yeah.
Okay, so it's not just cash; it's any non, I guess, NMLS related financing.
Yeah, so any financing that is not under the same laws that a bank would be under, which would include the Anti-Money Laundering Act, the SAR.
It's all three.
Yeah, it doesn't have to be all three. They have to just at least have one.
Oh, okay, good.
Yes. But most financial institutions do have at least the SAR and the AML. But now certain lenders, like let's say if they don't have those, but they have an MLS number, they're going to allow that now. But because that would take out a lot of hard money, right? That would like almost every hard money person would have to report. So so now it's if you don't have an NMLS license, then they will ask you to report.
Okay.
This is very unique, and like every single seller, whether you're considering carrying a loan or any type of your own financing, and then of course how the buyer qualifies, like everyone on every end of the spectrum, I should say, should know about this. Like,
yeah.
Excellent, valid point. I'm so glad we're talking about it.
Yeah, I feel like I've been going like on tour with this.
You should. Really. You really should. It's very powerful, and it really is. I was just having a very key conversation with my clients just before this live about how everyone works hard, right? But without the fundamentals, somebody dropping the ball can cost everyone everything. So this knowledge really is, like they say, knowledge is power. The more you know before you begin, and the more you actually like start engaging, the better you are.
Yeah, I agree. And, you know, like sometimes the topics are boring. This one is a little bit fun because you can add in like, you know, the cartel or like, you know, money laundering.
It doesn't sound very fun.
But, you know, if I just sat up here and I was like, the Financial Crimes Enforcement Network is making us do that. Like, you know what I mean? Like people would be bored. But I think when people understand like this is what we're trying to avoid is money laundering. There's $2.3 billion that were money laundered in the last couple of years. Like that, I think like opens people's eyes, and not that it excites them, but it makes them kind of listen. Like, oh man, this is a real problem. Like,
well, it's intriguing. No matter where your position is, whether you're a buyer, a seller, an investor, it doesn't matter. This affects you.
Exactly. So, but yeah, I will keep you guys posted if I, I'm sure there'll be a lot of tweaks to it and like some changes. And like I said, we'll figure out what's going to happen with the blind trusts and things like that. But for the most part, you know, they've delayed this since August. They've been trying to work out all the kinks. So now going live March 1st, it's happening. So.
Well, it sounds to me like although Conrad and I have some phenomenal guests coming on in the next few weeks, Jackie, working with you has been seamless and such a blessing. We've already closed a deal. And I really love how we work and the knowledge that you're sharing. We're going to need to get you back on here to get like an update just of your experience, even if it's like a 15-minute piece of whatever. I kind of want to keep updated on how this is going, sort of like when we talk with lenders and keep up with mortgage applications and those numbers, for example. I kind of want to track this a little bit and like see how successful it is, how the success is on both sides or from every angle, you know, and like it'll just be fun to watch and see how it goes.
Yeah, I know. Everyone thinks title and escrow is boring, but I'm telling you, we get like all the breaking news. Like it's just crazy. Like next month in April, we're gonna figure out the adjustments to the mansion tax rule that are taking place. If there are going to be any, we're really hoping for it. So that'll be another really fun update we can do, and that could be a short one. So yeah, happy to keep coming back and keep updating you guys.
We appreciate it so much.
Absolutely. Okay, so getting back to 101 because I feel like FinCEN's now like 599, title 599, but 101. What are the most common problems you see for title issues? Liens, judgments, unreleased mortgages, missing heirs?
I would say the most annoying one is the uninsured deeds that get recorded. I mean, that are, put onto that get recorded. Those can cause a lot of mix up on who's the actual owner of this property. And then that will take a lot more time to figure out. We're going to have to go back and go back and go back and follow the trail of paperwork to figure out, okay, why was this person able to sign for this? Why is this person even on this deed? Why? We're going to ask those questions. And if you don't have a good answer, like we're going to question it and we're going to want the right answer and we're going to have to correct it. So I think uninsured deeds is one. Two, like I said, those child support, back child support judgments, those people don't realize that that's going to catch up to you. And it's going to catch up to you in the sale of a house or if you want to purchase a house. Also, most common would be taxes. And then the number one thing that people don't understand is during COVID, they deferred their payments. So even when you're looking at like your statement, your mortgage statement, it's not on there, the deferred payment a lot of the time, the deferred amount. So when you're in escrow and let's say you're a seller and they go order the payoff and the payoff is, whatever the dollar amount is, which is what you've been looking at on your monthly mortgage statement. But then there's an extra line item of what was deferred. And I've seen it up to like $50,000, $150,000. And that affects the seller's bottom line because they're going to have to pay that off now. Yeah. And they didn't see that before. And that wasn't calculated into their net sheets. So until we got that payoff. So being upfront with clients when you're meeting with them with listing appointments and things like that, asking them, did you defer any payments during COVID? I would say every realtor should add into their listing presentation because it's making such a big deal now. So that I would say is one big one also. And just messed up vestings. And, like I said, there's a lot of probate going on. So getting those trust documents and all that from everybody to make sure we can avoid probate has been a fun one. So, yeah.
What are those numbers like, if I can ask, with like comparable to solar? Because what I'm like experiencing personally right now with my transactions, a lot of them are having hesitance with assuming solar contracts and so on and so forth. So similar to that, what do you think the comparable numbers are like?
Yeah, so solar is considered like a loan. So, and it's against the property. So when we order the prelim, it's coming up as an exception item. Hey, there is a solar, and this is the loan against the property for the solar. So that comes up. It does affect the bottom line. I mean, it just depends. I've had solar where it's a $500 and something thousand payoff. I've had solar where it's $57,000 payoff.
Right.
But when it comes to assuming that solar loan, lenders don't love it. So if you're a buyer and you're buying purchasing a property and it has that assumable loan, that's going to kind of affect your loan a little bit, right? It's going to affect your dollar amount, what you're going to pay monthly, that kind of stuff. And then with sellers, sometimes the loan is not assumable and you have to pay it off. And that's when it affects the numbers. That's it's gonna say, they're gonna say you have to pay this off, and now you're, $500,000 less than what you thought you were gonna net, or you're, $57,000 less than what you're gonna net. So I always tell my agents, make sure you get that, add that to your listing presentation, figure out what that loan looks like, figure out if that loan is assumable or transferable, or if it's going to have to be paid before you make any promises to your seller on what they're going to, I've seen some really ugly ones where the seller kept the loan but sold the house.
Oh, stop.
I don't know how. I don't know why they would do that.
Really?
But and then when they paid it off, they came and took it off the house. And the buyers were pissed, and the buyers sued them. So
yeah, that's crazy, but
I
can see it. So what you're saying, just to clarify, I want to make sure I understand that we'll see the solar obviously pop up because it's a loan on the prelim and things like that. Whereas the deferments we won't see, and our clients won't see on their mortgage statement. So it's really another key piece of why title and escrow are so important. Like title is really going to hold that information, which is, again, why we reach out to you for that prelim right when we get a listing, because it's really important to clear that up as soon as possible, right?
Right. Yes.
But you're going to see the solar sooner likely than something like a deferment.
Exactly. Yes. Deferment, usually we catch, especially I like to order the payments right when I start the escrow, the payoffs for the loan payments. But some lenders, they charge you per payoff, and I don't want my client to be charged 3 times for the same payoff, So some escrow companies will wait until right before they go to loan docs to get the payoff, and then boom, surprise, there's deferred payment on there that no one took accountability for, or account for, or thought to even ask the current borrower if they deferred payments. So now we're kind of oh no, you thought you were getting proceeds of 1.2 million, and now you're getting it for only, I don't know, 1 million. So it just depends how much you deferred. And that can make a big difference, especially if they're trying to sale to purchase. It makes a huge difference. So then we get yelled at and all these things. And, so I would say adding to your listing presentations as agents, or to all the sellers out there that might be watching, make sure you're upfront when you're meeting with your realtor that if you've deferred payments, if you have solar, what the solar status is, and then also HOA. If you know that you've been delinquent in your HOA payments and you haven't paid them for 3 years, let your realtor know, so that way we can, order that demand from the HOA and see what that's going to cost you. So
these are such important key points.
Yeah. So
all right, we'll get into the comments and then kind of get closed out for here. All right, so let me get into it.
Sorry, Jackie, I probably asked more questions than the people online, but oh my gosh,
that's okay. That's okay.
That's what I'm here for.
But it's so informative. No matter who you are, I would not discount a broker watching this and learning from it, or a banker, or there's just so many aspects, right? So
right. Yes.
Thanks for being patient with me. I like how open you are.
Oh, yeah, no worries. Thank you for having me again. I love these kinds of things.
All right. Well, I think this one is asked by Crystal already. Is title a physical document or a legal concept?
Technically both.
Okay.
Because title, you do get the once we close escrow and we close title, you will receive a month later, your new physical grant deed. You will receive some post paperwork that you are going to want to keep track of. And then also title is very much just a legal concept, because we are in place to really protect mainly the buyers and the lenders, to make sure that everything is, cleared before the property is transferred. So that we just do it all behind the scenes, so you don't have to see the big stack of paperwork that comes along with it. But title in that sense could be physical, meaning all the paperwork you have to do, but it's very much a legal concept on the back end.
Got it. Oh, This is a good one. Title facts. Yeah, you better you should copyright that, Jackie. So
Right. Title facts with Jax.
Gorilla.
That's great.
But yeah, and I do encourage people not to buy those landlock things that you see on daytime TV that are like scaring grandma. I don't recommend buying those. I do recommend now the underwriters like First American and all those title companies will actually give you those. So you don't have to do that.
Got it.
Yeah.
All right. How far can you go back in a title search?
Ooh, I want to know this answer too because I'm confused by it.
So it really goes back. Like I've seen deeds from like the early 1900s, late, like really, really late deeds. And you'd be shocked on what they look like. They look like literally like a coupon that you would get at like a grocery store or something. Like it doesn't look like a deed. But they do go really far back for us. Like if there's a bunch of uninsured deeds, like what we were talking about, we sometimes have to go back that far, like to the 1901s and see like, how many times has this property transferred? When did it leave this family? When did it leave this family? When did this person come on title? So we do have to go back sometimes that far because some people like to build their generational wealth on one property. So sometimes.
So next question, how over, we'll say a 70-year period, if there are multiple acquisitions of a title company, let's say a home is purchased and they have title insurance, and then they go decade to decade in generational wealth status, same family, no transfer of title, but the companies have been acquired time and time and time again, and then the records sort of disappear. What would you do in a scenario like that? Would you, as a homeowner, would you go back and seek a new title policy? Like, is there recourse? What if there aren't records? If they can they go back? How far can they go back?
So title insurance itself started in 1876. Anything that was recorded before that is kind of hard to find, but because that's when they started actually keeping record of everything. Everything else is kind of like, here's a deed, here's the money, like kind of, transferred between person to person instead of having this third party involved. But I would say that you don't necessarily so if let's say you sold a property 5 years ago with First American title, I will see that even though I'm 805 title. So it doesn't really matter which title company recorded it. It's on the deeds and it's on whatever is being recorded, which title company did do it. But it doesn't really matter a lot of the time because they're being replaced by a bigger title company. What I would say sometimes is the escrow company. If the escrow company is really old or doesn't exist anymore, that can be an issue because they're supposed to keep legal documents for only 5 years, escrow companies. But sometimes it's like, hey, you closed this deal 8 years ago and this family can't find a copy of their trust, but I know you had one because they, purchased in the trust or they sold in the trust. So I know you have a copy of it. Can I have it? The escrow company has every right to say, no, I am only liable to keep this record for 5 years. But if they're shut down after only 3 years, it's really hard to track them down and find the document or ask them why this recorded the way it did. So escrow companies, I would say, are an issue, but title companies, not so much.
Very good to know.
Yeah.
Got it.
Holy cow.
All right. What's the worst case scenario if someone doesn't have an owner's title insurance?
That they would inherit something on the property that didn't belong to them, that just wasn't caught. I've seen some issues where there's been old I guess you can say like boundary line issues and things like this, where they're going to now have to pay those land surveyors. They're going to have to pay extra money out of their pocket to now get it exclusive or get it figured out and what is exactly what. So I would say it's always best to just get it, just why not? Just have it. But yeah, I know a lot of people have been saying that they want to do the attorney letter that was going to just kind of get rid of title insurance. And I don't think that that's a good idea, but it is what it is. Other states are already pushing it. But yeah, you don't have to have title insurance, but it's definitely recommended. And if you're getting a loan, a lender is going to require you to have it.
Right. Absolutely. Okay, let me go through this.
The response and like the way that my face looks right now is just like, who in their right mind wouldn't have title insurance?
Yeah.
Such an important thing, you guys, which is why this video is like everything. But yeah,
I had a $20 million sale in Beverly Hills, and they refused to do the owner's title insurance policy.
Okay.
The wild, wild west out here.
I mean, I guess at that point, it 20 million, it is what it is. But
yeah, but if you got neighbors, moving their fences a little bit closer, or whatever around them, so
or you just find out that Joe from 85 years ago, like he's got family looking for him now, and they're like coming after your property, like it's just kind of nerve-wracking. But when you have $20 million, I guess it doesn't really matter.
People who have $20 million probably don't want to spend the extra, though. Yeah. They got there by saving it and not spending it.
True.
They're pretty, savvy. So that matters. It could be a huge game changer financially.
Right.
Yeah. How does title work differently in probate?
I would say title, we're very proactive before the probate even goes live. We're actively working with the attorneys, the agents, making sure that everything that's on the prelim can be cleared by the person who's assuming the property. Sometimes, like I said, there's judgments against maybe someone who's deceased, and we have to clear that up. So yeah, I would say probate, we have to be proactive in working with getting things prepared for the sale before it goes live. And we need a lot of documentation to be able to prove this and that, and court documents and all that stuff. So we need all of that before it can be sold.
Yeah. And then how do you handle a divorce? Oh boy, here it comes.
Yeah.
Divorce is hard. They're my least favorite because, hopefully there's an attorney involved, but otherwise the agent ends up being like the attorney, and which is not fair. And, they're split between these two people. This person says one thing, this person says another thing. So they usually are delayed. But I will say we handle it with having two separate DocuSign accounts for each person. So that way each person is knowing what they're signing and on board with what they're signing. We also handle it with, sometimes we have to track the other person down and get like an interspousal deed signed or something like that if they're divorced and they never like cleared up the title on it. So they're never fun. They are always like a little bit more extra steps, but I mean, we all understand, divorce happens. And so, just sometimes we have to step in and contact that spouse instead of, their ex-spouse contacting them to get something signed, which we're happy to do. Yeah. If we can get their contact information and stuff like that. If we can't, then we're like,
For the record, as agents, I mean, I'm not sure how Conrad feels, but I've been in that situation before, and I'm very, very grateful that I had colleagues that I could depend on to communicate, for example, a statement of information for someone going through a divorce who was not finished with the divorce process, but still wanted to buy single and solely. I'm very grateful that I was able to rely on title and escrow for certain communications. It's a one-page document, and sometimes the agents can work it if we can stay super platonic. And like, also there are times when that's not possible for us. So to have you guys is like a true asset, if there's not an attorney involved.
Yeah.
No, well, I actually went through something like that. I had a buyer that wasn't legally divorced at the time, and he was separated for over 10 years. And yeah, we were getting close to the end, and he was like, "Hey, this popped up."
And this came up 10 years post separation. So that's a big deal for people if you're going through a divorce. And I know that this is something I believe that Conrad, you touch on in your book, is like these timelines of divorce and sale and like how they all play out is really important to be mindful of, you know?
Yeah, I mean, the thing was, I didn't know until the end,
Right.
and the lender knew what was going on, because you ask more questions as a lender, as far as that's concerned. So yeah, that was a big surprise, and thank God that he had a son that was the mediator between
Oh,
the spouses, and because that could have been his earnest money deposit gone. Because
Absolutely.
it was literally like no contingencies, all off. I'm like, ooh.
So that's exactly why this is so critical, is like what a testament right there to like what a game changer it is if you find out way too late in a transaction.
yeah.
Like,
Mm-hmm.
I mean, total game changer. So being proactive is, again, very critical. Who you work with matters.
Yeah. I mean, I've had buyers tell me like literally a couple days before, closing, like before getting loan docs, pretty much like, oh yeah, like my ex-wife. I'm like, how current is this ex-wife? Like, what do you mean? And then it's like, oh, we're still going through the divorce. I'm like, well, this is a community state, or like community property state. And if it's not exactly like completely done yet, like they're going to have to sign off that they have nothing to do with this property. And I'm going to have to let them know that you're buying something. Yeah. They're going to sign that they can't have anything to do with it. And they're probably not going to like that.
Right.
Yeah.
Question with the 10-year post separation thing, like how does that work even in a community state?
It doesn't matter. It
really property. It doesn't. So filing for separation versus finalizing your divorce is the bottom line game changer, because I know people personally who think that because they're in California and because they filed for separation, that that's good enough for assets. And it's sort of like, well, this is a community state, like you said, community property state, I should say. And so I'm not sure where that line gets drawn, but this is important. I mean, 10 years post separation to still be an issue as far as settling assets.
And to the way you're vested. So if you're vested husband and wife as joint tenants or
joint tenants with rights of survivorship.
Yeah, exactly. So how you're vested also really matters in that sense. And I have seen like the separation thing, you can get away with it as long as you're vested in a certain type of vesting. But they still are going to have to find something, but it's not as like drastic as like, you're not divorced, then this is like the only way. But yeah, I've seen it get ugly. And like, even sometimes I've had people who are randomly on title that like, they're like, oh yeah, like they just helped me get this loan. I don't really know them. And I'm just kind of like, what? And I have to go track them down. We actually have had the clients hire private investigators to track people down to be able to get these signed, because we can't sell the property without these signed. So that's been fun. So
astonishing to me. Absolutely like flabbergasting.
Yeah, absolutely. Absolutely. So, just real quick, Jackie, vesting, just go over the different, vesting besides LLC corporation. What are the other ones in California?
Joint tenants is a popular one. I have actually, hold on. I have a little form for you guys I can show you. So you guys can follow along with what I'm saying. Give me one.
Excuse me 1 second. I'm answering a quick call and I'll be right here, like 2 seconds.
Yeah, absolutely.
Okay, no worries.
Right. Using PowerPoint. It's okay. It's okay.
Everything logged out, of course, because we've been
chatting for some time.
Those security measures they have are
now.
it logs me out like every 5 minutes. I'm like, I wasn't done yet.
Yeah. Yeah. So everybody that's watching out there, that goes to show the intensity for title and escrow people to, protect your data, protect information, avoid hackers, avoid from someone coming up to her desk and, logging in and looking up sensitive information. So, this delay right now is just goes to show like how hard it is for people to kind of, just get on the computer and log in.
Yes, I know. It's good. I mean, it's good safety procedures and everything like that, but it's not easy.
Single sign-on is not really going to happen a lot in the finance industry and all that.
Mine logs me out all the time too. Used to it. I got like a 2-hour max, and then boom, then all day, every day things. I gotta re-log in probably 5 times, but I think well worth it for the safety and protection measures. And then obviously, as realtors and even title officers, we have a lot of forms and documents to fill out. So I don't feel like one more is really that detrimental. I think that it's, again, protecting consumers and in both directions. So not mad about it. It's okay. It's worth the extra effort to protect people.
Okay, I think I got it figured out. I think last time we met, I had just spilled some water on my laptop. So I just got my laptop yesterday. So let's do this one. Oh, it wants me to toggle this on.
I can't live without my computer. Hats off to you, girl.
Oh.
Oh no, okay. I hope we didn't lose her.
Yeah, I think she hit the wrong button, but
well, maybe there's a way that we can get what she was going to share her screen with and like put it in the comments or something.
Yeah, no, so there's a way for her to present and on here, so
what a valuable conversation.
I agree.
I feel like every time we do this, it's fabulous, but wow, like this is amazing.
Absolutely. Absolutely. All right, let me see here. I hope she's not calling me.
Well, that's all right.
Yeah, let me see. Let me give her a call real quick.
Give her a call, and like I'm grateful for everything I just learned. It's so cool to be in this industry and be a professional and to just have ongoing education. And that's what these lives are all about,
Oh.
Did not like that. I wanted to share that with you. I don't know why I did that. I was like, hello. But let me pull this up.
Thanks for jumping back in, because we were both like, wait a second. We were excited. What happened?
I'm so sorry. I don't know why it wanted me to do that. But all right, let me share my screen now. All right, here we go. So we have, where'd it go? This is, can you guys see it?
Yeah.
Okay. Let me see.
Roll it up a little bit. That'd be great. But
yeah, if you can.
So
there you go. This is great.
So this is, I actually print these out for our realtors on little cards because technically they're not supposed to explain title to their clients. A CPA is really supposed to try and go through this with them. But so common ways to hold title if you're a sole ownership. So you can do a single man or woman, an unmarried woman unmarried man or unmarried woman, or a widow or widower. So this is someone who's not in a legal domestic partnership. You can do a marriage. So you can be like, Jackie Padilla, a married woman or a married man as his or her sole and separate property. And then Jackie Padilla, a domestic partner of his or her sole and separate property. So this is someone, a domestic partner who wishes to acquire title in his or her name alone. So we do see that a lot where, especially investors, they're usually purchasing something and they don't want their wife associated with it. So this is basically saying, I'm a married man, but this is my sole and separate property. And then that will trigger us to produce a interspousal deed, which the wife or husband will have to sign and say, hey, I have nothing to do with this property. I'm not on title.
Is the interspousal deed the same as the statement of information, or how do they differ?
No, so statement of information is basically title collects that data just to go through and make sure, let's say if there's another Jackie Padilla who has multiple judgments and multiple liens against her, and those have recorded against this property for whatever reason, and this seller named Jackie Padilla has acquired those judgments and titles that don't belong to them. We use the statement of information to go ahead and clear those items that don't belong to them. So that's what we use the statement of information for. It also gives us information like, are you married, or have you been married, or are you divorced, or are you separated, or are you recently divorced? So we do ask those questions on the statement of information. And we get that back usually in like the beginning or mid escrow, because that can really change, especially for a buyer, their current vesting of what they're going to be going into. And then also sometimes, there's a surprise seller who's like, oh yeah, I've been married for 10 years. And like, we had no idea. So then we use that to kind of tell us a little bit more about that.
Got it.
But the interspousal deed, it's recorded. Notarized and recorded. So it's, it has to be notarized. The statement of information does not need to be notarized. That's kind of the key difference.
Okay.
So if you're co-ownership, you can do community property. So joint ownership of a property by married couples, domestic partners, differs from separate property, premarital, gift inheritance, post separation, and written designation. So this is the one that you can kind of get away with when you're going through the separation. This is the one, the community property vesting. So, Jackie Padilla and Crystal Rains, as community property, we can get away with they're separated. You'll still have to sign the interspousal, but it's just they're separated, and that's fine. They don't have to be fully divorced yet.
Got it.
Community property with right to survivorship. I actually just had one of these. Kind of sad. My neighbor's wife passed away, so they're this is how they were vested, and they have to come out of this vesting, and they're gonna just transfer the property to their son. But this is basically similar to this one. You're still joint ownership with the spouse, but it grants rights of survivorship like joint tenancy for in the event that one of the other people pass away.
Right.
So the survivor inherits all interests.
Right.
Joint tenancy, so co-ownership of property by two or more people with equal interests and survivorship rights. So this is kind of like these two combined. Title must have been acquired at the same time. So this can't go back to like a previous property. You would have to either get an uninsured deed or maybe refinance and then go into joint tenancy if you wanted to hold title like this with a new wife or something like that. Tenancy in common, co-ownership of a property by multiple individuals in unequal. So this is when you have like, oh, my brother is going to have, 70% interest. And then the rest of my siblings are all going to have 10% interest, and I'm going to have 5. So when you want to split it up like that, this is the main vesting that you want to use. So tenancy in common or tenants in common is kind of how it reads a lot of the time. And then this will have their own shares specified in the vesting.
Right.
So it'll say like tenants in common, Jackie Padilla, co-tenant with 25%, depending on whatever the percentage is. So those are the most common, I would say. Other ways are going to be corporations, partnerships, trusts, and LLCs. But again, if you're buying in any of these, you're gonna have to, and you're buying cash, you're gonna have to report to FinCEN. So.
Yep. Absolutely. Absolutely.
I love it. Conrad, you keep killing it with the guests, man. I know that we've worked with Jackie before. We're going to keep working with her, but every time I do these lives, no matter what I have going on in my work day, I'm always like, ooh, I'm really excited for them. And this is really, it's been so informative. I've been in this business almost a decade, and I even learned so much. So, Jackie, I'm grateful for you. And Conrad, well done, as always.
Absolutely. So Jackie, last thing to say, just, final word on title.
Yeah. I mean, if you're looking for a good title partner, reach out to me. If you just want to stalk somebody and you want to look at their property profile report, you can call me and I can find it for you. It's all public data. And then also with my title company, we do provide a ton of really good marketing intelligence resources, especially for open houses. And that really helps start conversations and good to just inform the people in the neighborhood about what's going on in the neighborhood. So I am your go-to title girl, Jackie Padilla with 805 Title, and my phone number is 818-585-2957.
Absolutely. And FYI to all the weirdos out there, all calls are monitored. So just give you a heads up, guys, who out there. So all there in internet land. So all right, Jackie, thanks for joining us again. And I guess we'll stay tuned for more FinCEN news.
Yeah, I'll keep you guys posted. Definitely.
Thank you so much.
Thank you so much. We'll talk to you soon. Oh,
I cut her off too soon.
No worries. Again, very well done. I think that this was a very powerful conversation. And even though it's recorded on our YouTube, I'll even still probably go back and watch it.
Absolutely. Absolutely. All right. Thanks,
Awesome.
Crystal.
Yeah, thank you. Chat with you
soon. So everybody out there, just FYI, we are having a investment loans 101 next Thursday. So join us for the next live and we'll kind of go from there. So Crystal's gonna have to pop out right now. She's in the middle of a really popular property down in San Diego. So we'll see you.
It was great to be here. Thank you so much for everything, Conrad. So informative, and I will see you back here next week.
All right.
Absolutely. Later.
All right. So today you learned something most people never take the time to understand. Title's not just paperwork. It's protection. It's verification. It's legal ownership. And it's what stands between you and financial disaster. If you're thinking about buying, selling, going through probate, or restructuring ownership, don't wait until escrow to discover the problems. Have the conversation early. If you have questions about your current title, how your property is vested, probate situations, divorce buyouts, or investment structures, reach out to me directly. And if this was helpful, please, please, please like and subscribe and share this with someone buying a home or selling a home, and join us for the next live where we break down another part of the real estate process that most people never explain. And because informed clients make powerful decisions, we'll see you next time in the Investment Loans 101. All right. See you then. And